right, traders, it is time to prepare to trade the best setups at the best prices. We are going to be going over the key levels where we are planning to buy call options to make money on the upside and where we're planning to buy put options to make money on the short side. I'm going to show you how you can make money trading both ways heading into this week with our key levels. Let's get straight into the analysis. So in terms of the SPY, it's very important to understand in terms of where we are at in terms of the overall market. As you can see, these are the 52-week highs right here at $444, and it's consistently failing to break above that level, and it's consistently failing to form support at 443. Things to keep in mind is we do still have a gap to fill above at 443.13. Our two best levels for puts where I'm extremely interested in shorting the SPY buying put option is going to be the first level at the gap right here, 443.13. And then our second level is going to be right here above 443.90. All of those are going to be your best levels possible for put options heading into this week. And then in terms of calls, we will be looking for a gap close reversal at the lower level. There's a gap to fill below at 431.44. As you can see, this is very strong support on the SPY where a massive bear trap was triggered, where SPY had a massive run after forming a double bottom towards this level. And there's also a gap that's waiting to fill below down here at 431.44. So what we're looking for is in terms of overall trend reversals, and you could try aiming for slightly bigger wins than usual since these are at the best levels possible. We're looking for nice trend reversals for a gap close reversal to go long at 431.44, and then we're looking for a gap close reversal to go short at 443.13. So set your price alerts at those levels, and when those price alerts trigger, you're going to want to look for confirmation. And the best confirmation to use for a trend reversal, in my opinion, is the 30-minute chart. Meaning, if you're seeing a red bearish 30-minute candle towards the gap or at the gap, it doesn't have to be exactly at it, very, very close, or even above it, say it broke a bit above it, right? Or you're seeing a trend reversal 30-minute candle at this level, then you're going to want to do puts. And then if you're seeing a green bullish 30-minute candle at or below this level, or a trend reversal 30-minute candle at this or below this level, then you're going to want to do calls. So in terms of best setups at best prices where we can see a crazy reversal, that would be your true best entries. Now, in terms of where we are right now within the market, we are currently sitting basically towards the upper middle of this channel. So you could say the high of the channel is going to be focused towards 443 to 444, and the low of the channel is going to be towards 431.44. Now, right now, we're currently at 438.55, so we're towards that upper middle. With that being said, it's not truly the best price to be trading at, so you're going to want to use some strong 30-minute confirmation in terms of overall direction. But let's kind of break down the micro chart in terms of some more short-term potential trades, and this is going to help us understand in terms of where we overall all are for the micro and on the key levels. So right here, these are the main points that I really want to make. SPY has a gap to fill above at $443, and then there's a gap to fill below at 431. So right now it's a race to the gaps. It's going to try to fill one of those gaps, and then one of those gaps fill. That's when it's going to try to have a reversal. You just need to wait for ideally a 30-minute reversal confirmation, right? So we're sitting in the middle. It's trying to fill one of the gaps. Now, based off of how this chart looks, this is a very bearish candlestick on the daily chart. This does appear to be bearish. Now, I did go back throughout the daily chart, and in my opinion, this is a very bearish daily candlestick. The weekly chart doesn't look too bullish as well. I looked at the weekly candle. Now, I really haven't seen many scenarios where SPY is at a major resistance level, and then it forms a bullish doji at support. There's a gap right here, bullish doji, and then it forms a bearish doji the next day. I haven't seen too many scenarios on where this typically happens, especially when it's at 52-week highs. So anything is at play in terms of what can happen. But one belief I do strongly have is whenever we do decide to retest this 443, fill the gap at 443, or even go to 444, I believe those are going to be phenomenal opportunities to short the SPY and buy puts. And I'm going to be extremely short biased at those levels in advance in terms of what I'm currently seeing, right? But it's very, very important to react to what you're seeing and trade what you're seeing, not in terms of preparation and what you think. But I'm extremely short biased towards that zone, right? But in terms of like right now, basically, this is what you need to understand. So 438.55, that's where the SPY closed. The previous closing price is always going to be one of our key levels. So that previous closing price is towards the upper middle. We're going to draw a line at 438.55. So basically, that's at your pre-market lows. It basically closed at the pre-market lows. We have a gap to fill above and we have a gap to fill below. Now, one thing that I really want to point out is basically these levels here. These are very, very key for the SPY. You could see right here, SPY had major resistance. We had major resistance at this level right here, previously at 437. That has now reacted as support, and it then pushed up higher to fill the gap. And then you could see it's trying to form some higher support, but it's also trying to form some overall lower highs, which is extremely bearish from like an overall perspective, because it just keeps on trying to get crushed to go back down to fill that gap at $431. We have the gap to fill below at 431. So in terms of our make or break support, it's going to be 438.55. 438.55 is make or break support. If it holds, they're going to spike it to 440. If it breaks above that, then we go to 442, above that, 443, above that, then 444. Now, if we can crack below 438, react as a resistance, we're going to go to this next key level. Our next key level would be right here. This is where we would drop to 437. So 438.55 breaks down, reacts as a resistance. Then we go to 437. If we go under 437, then we're going to go to this very strong overall support, which would be in between the range of 435.50 to 434.50. Now, in terms of some things that I can say in advance, SPY has been spiking at key support levels. So it's really not ideal to try to buy put options and hope for a breakdown. So best thing we can kind of do in a situation like this is to wait for key dip levels to buy. And some of the key levels that we should keep an eye on would be the bottom wicks that haven't been retested. So in terms of those true best levels, there's a lot of support at this 434.60, 434.60. You got a ton of support here with a lot of nice bottom 30-minute wicks. Every single time SPY has been retesting the lows of these 30-minute wicks, it has been bouncing. And then you also have a lot of support at 435.80 and 436. So you can keep an eye on those overall levels. So like right now, truly, I'm not too interested in terms of where the market is at the moment, in terms of like making this video and creating a plan in advance. It would be best to just wait for the better levels, which would be puts at 443 to 444. We can keep an eye on call options towards this like 436 range, but a much better range would be 434.50. And then our true best level for calls is at 431.19. So it's just simply understanding we're towards the upper middle, not the best levels for calls, not the best levels for puts, not the best level to be trading at, period. But as time passes, our key levels are going to be triggered. And I would say our main key levels, if we were to narrow it down to our overall best levels, it would be calls for a nice trend reversal, aim for a bigger win at 431.44. And again, if it cracks, reacts bearish, doesn't matter. Just wait for a 30-minute green candle and then just buy the calls, right? And don't nickel and dime it either. If it's, downtrending and it almost fills the gap and then you see a bullish 30-minute candle, then just buy it a little bit higher, right? So it could be higher or lower. We don't know. We have to wait to see how it looks. Trade what you see. React to what you're actually seeing. So, and then in terms of calls, it would make sense to see a bounce whenever we do decide to drop to this 430-460 level. There's so much support. I love the idea of buying calls at this level. And then the calls that went out of the money, 435 strike, they should become in the money. And then I'm also going to be keeping an eye on this, because this doesn't seem like too bad of an idea to try to buy calls basically 436.40 to 435.80 range. In between that range, the 436 calls that go out of the money should try to bounce back in the money for a dip. So those are my key levels to buy the dip and to buy calls in terms of making this video. And then, like I said, for puts, it's just going to be very simple, like 443 gap close reversal to 444. Whenever the SPY does decide to retest these higher resistance levels, I strongly believe we are going to pull back. But again, doesn't matter in terms of what I'm seeing in advance, what I'm thinking in advance. What matters is what is actually happening. What reaction are we seeing? What 30-minute candlesticks are forming? But I'm telling you, once we retest some nice resistance towards 442.60, 443, best level would be 444. When we're seeing red 30-minute candles forming at that resistance level, I'm going to be buying puts, and I'm likely going to be holding those puts for a little bit, maybe aiming for a bigger win, because I'm extremely bearish towards that level like we have been for the past week now. So that's my overall thoughts. That's my overall analysis. Basically, we're towards the upper middle, and it's going to be a race to fill the gaps. That's what it's going to be. It's going to be a race to fill one of these gaps at 443 to 444 to 431, right? So you really don't have to try to predict which gap is going to fill. You can just wait for the gap to fill, and then you wait for a 30-minute trend reversal or a 30-minute, bullish or bearish candlestick, right? If you're doing puts and bearish, calls and bullish, right? That'd be the best thing you could possibly do. And then focus on calls at the bottom of the 30 wicks. You can see 434.50. You can also see this 436 to 435.80 range. Nice spot for calls, right? So it's just understanding on where we overall at, and then preparing for that in advance and having the right mindset that we're going to wait to trade the best setups to this prices. Because once these trade ideas do trigger, like I said, our key levels, that 431.50, 434.50, 435.80 to 436 40, and then of course 443 to 444, those best levels should all do phenomenal. And then again, you want to use the 30-minute confirmation. You would also want to go with the best levels possible, but those should all be great trading opportunities for what we had discussed within this video. So it's just about waiting, just waiting, not trying to predict on what's going to happen first, whether we go up or down. Just kind of wait for the moves to happen, miss out a little bit first, and then when we get to those best levels, we'll be prepared in hindsight what's likely going to happen, and then we just wait for a confirmation, seize the moment, execute, right? So we're at make or break support. 438.50 is make or break. Just to give you the price ladder, so basically what this means is this ladder that I'm going to give you, if one of the levels reacts as a support level, then it goes up to the next level. If one of the levels reacts as a resistance level, then it goes down to the next level. So if you're seeing a strong confirmation at one of these levels that I'm giving you, basically it's going to try to go up to the next level if it's support, down to the next level it's bearish. So this is the overall ladder. And I'm not interested in trading at every single price level within this ladder. The point is, it just gives you the overall direction and brackets and just a better understanding of where price is going to be heading. So 444, that's the top of the level, best level for puts possible. Major resistance right here. 443, there's a gap to fill at 443. That's an amazing level for the gap close reversal level. In hindsight, if I try puts at 443, I would likely just add if it went to 444. I typically don't do that, but I'm fairly confident that it is going to drop from that level whenever it decides to retest. And then, say 443 reacts as a resistance, it goes bearish. What's the next level? The next level we drop to is going to be 444. 444, previous resistance right here, that's the next level. If it goes below that, then 438.50. If it goes below that, then 437. If it goes below that, then you're looking at like 435.70 to 436.40, a little range there. If it goes under that, then you're looking at 434.50. Great levels for calls, 434.50, one of the best. Also keeping an eye on for potential calls at 435.70. One of the best ideas would be that 435.70. You can try maybe a starter at 436.40. But basically, if 436 strike calls go out of the money, they should spike back to in the money. So the best bet would be likely 435.80, buy calls there with a 436 strike. And then your true best levels, next level we go below that. 434.50. 434.50 is a very, very nice overall range to try buy calls. And then if we go under that, the next level we would go to would be 433. If we go below that, the next level would be to fill the gap at 431.50. So based off of those ladders, if one of those levels that I said reacts as bullish support, then it goes up to the next level. If one of those levels that I said reacts as bearish resistance, then it goes down to the next level. Now, the ones that I'm interested in trading in terms of preparation and hindsight as of now, I'm interested in 430.150 for calls. I'm interested in 434.50 for calls. I'm keeping an eye on this zone for calls. This is a higher zone, 436.40 to 435.80. I'm keeping an eye on that zone as well. And then for puts, it's very simple, just 443 and 444. And then that's it. So the other levels, I'm not interested in trading at. In terms of making these videos and trying to give you guys the best information, the best setups and best prices, I really have no true, like, I wouldn't want to sway anyone to any other levels or anything like that, right? So I would just kind of sit on the sidelines for those other levels. Now, in terms of me, when I'm trading and I'm looking at SPY, I might trade at the other levels if I'm seeing a confirmation or a reason to get in. But I know those aren't the best levels. But it's also understanding there is more than trading to actual levels. I'm starting to see, like, the 30-minute chart is really trying to convince me in a sense of, like, how important timing actually is. You know, getting the right timing of a reversal for a big move. It's starting to seem very, very predictable to try to aim for some slightly bigger gains instead of doing multiple scalps using this 30-minute chart. You know, you don't have to do that, but I'm just starting to see how important timing truly is. And in terms of timing a reversal or timing an overall trend, I wouldn't see a better way to do that in terms of accuracy using the 30-minute chart. It's literally showing that, you know, trying to aim for the best level with maybe a 1 minute or a 5-minute confirmation might not be the best thing to do, because the 30-minute chart is just such a strong confirmation. Sometimes you're not going to get at the best entry, and then sometimes you're going to get into the best entry. But the upside is, it's like you time it perfectly. That's the beauty of it. It's like when the 30-minute candle closes and you know the pattern and what's expected to happen, it's like as soon as you get in the trade, it starts working, and it's designed for bigger moves, far greater than just quick scalps. Typically in a 30-minute candle, I'll look to do multiple scalps if I'm not going to hold it. I don't like holding positions, but if I'm bullish on the next 30 minutes, I'll try to do 2 to 3 scalps within that. And then if I'm bearish in the next 30 minutes, I'll try to do 2 to 3 scalps in that. But those are all my levels, and then I share with you the ones where I'm interested in trading at. Now, in terms of what I do tomorrow, I might do something completely different. You know, I might do something, I might trade one of the levels where I'm not expecting to be trading at, because I'm seeing a very strong confirmation. You know, I'm waiting for the chart to develop. So like one tip I can give you is, like, wait for the chart to develop. If we're interested in some certain key levels and they're not hitting, it's going to take some time, right? The market's going to reward the disciplined ones who are patiently waiting for the best of best prices. In the meantime, you just kind of sit out and you wait for the chart to develop, and then you'll start to get a read on the market as the day goes on. You'll start to understand if it's having slow price action, if it's having fast price action, and then you'll see the channels for the day. You know, let's say the channel was, okay, it bounced off 438.50 and then it spiked all the way to 442. So you would then know, well, wow, if this drops back to 438.50 the same day, I'm going to try calls. Or say it just, forms a very strong bullish wick. We know SPY has been bouncing off the 30-minute bullish wicks. Basically, whenever SPY has been bouncing on the low of a bullish 30-minute wick for the most part at a key level, it's been bouncing. So say it forms a very nice 30-minute bullish wick, and then you wait for it to continue to go up, and then once it starts dropping, when it retests the bottom of the 30-minute wick, then you start buying calls, right? So one thing I would recommend is, instead of just jumping in on the gun when there's no key levels, just wait for something to develop. Wait for some sort of trend to develop. Wait for some sort of channel to develop, and then play the overall channels. If you wait to miss out when someone's going to get trapped, whether it's bulls or bears, wait for the bulls to get trapped, wait for the bears to get trapped. Now you know where the traps are. Look to play the retest on the channels. That's one tip I can give you. Just wait for the overall moves to play out, and then you'll have a better understanding towards later on in the day what's likely going to happen once it retests one of those levels. Look for the trends, look for the patterns, use the 30 minutes to your advantage, right? So I'd really encourage you to go back and watch the past 2 videos that I posted, the Ultimate Candlestick series that's going to teach you how to use the 30-minute chart, some of the basics. And if you do want to be a part of Traders Society, it's going to be the first link down below in the description. You can get started trading with us live at market open. I'm giving you guys in terms of what I can give you in advance. Obviously, when the market's open and things are developing, I'm going to have a completely different analysis if it's not hitting any of our key levels, and then I'm going to be trading based off that analysis as well. So if you do want to be a part of Trader Society, it's the first link down below in the description. It is a one-time fee, and you get lifetime access to the program. And you're going to be getting access to the Discord server, the live trading streams, the live trading voice channels. Every single real-time trade alert that I send out, entry and exit, will be posted within the Discord server. You also get access to the watch list, to the daily analysis, to the confirmations that I post, my real-time live market commentary, all written out for you in real time, including the pre-market, market hours, and then after hours market close. So if you want to be a part of it, it's the first link down below the description. You also get access to the moderators, the networking opportunities, and the local connections, along with the video lesson library and the course. Everything is included in there. If you want more information, it is the first link down below in the description. And as soon as you join, you get instant lifetime access for a one-time fee. I will see you guys tomorrow live at Market Open, and we will continue to crush it.